Market update. Today is Wednesday, the 29th of September. So just about to wrap up the month. What do we have going on today? What are we looking at? What are we potentially trading? What directions do we want to trade? Let's have a look and see. First thing, we've talked about this earlier in the week. There is potential for, so yesterday, right? Yesterday we had news. We talked about the hearing and how that could be a catalyst. Remember, markets move. They're like a train. Trains are just going down that track. They're chugging along. You don't want to jump out in front of that train and hope that it stops, right? You want to wait until it stops and starts reversing before you get on and maybe go the other direction. You don't want to keep jumping in front of it. We talked about that yesterday, how there are catalysts in the marketplace that can either start slowing that train down, maybe bring it to a stop and eventually help it reverse, or they add fuel to the engine and it just keeps trucking. Yesterday that meeting added fuel to the engine and it just kept trucking, right? So there's another meeting today, which is this. It's not really a round table. Is it a round table? Yeah, panel discussion, round table, whatever you want to call it, with your ECB leaders, Bank of England, Bank of Japan, and Mr. Powell are getting together and they're going to be talking about economic policy and just how central banks can kind of help during these current times. And it's listed as orange and red because of who's speaking. What's really going to come out of that? No one knows. But the sound bites that could come out of it, if they're alluding to potential policy and how that might expand or contract their books and money printing and so on and so forth, that could lead to further fuel in the engine of that train. So, the long and short of this is we don't want to try to anticipate what's going to happen. We don't want to try to prognosticate, they're going to come out with this plan or they're going to talk about these things or these sound bites are going to occur. No one knows. I say this all the time. No one freaking knows. Trade your charts. Have a plan. Trade the plan. That's all you have to do. Have a plan. Trade the plan. Give yourself a little opportunity to win a little bit more than you lose. And over the long run, voila, you end up being potentially profitable. That's all it comes down to. So with that said, what's the plan? The plan's the same as it is every damn day. This is the plan. We look and see what the market bias is across three instruments. We want to see where the market is trending, right? That's all we want to do. We just want to see what the bias is, and we want to trade with that directional bias and use a quantifiable, quantitative way to trade with that bias. So what does that look like? On the ES, it looks like a short bias. We've got 4 hours short, 30 minutes short. We want to see the market push up like it's been doing overnight, right? We want to see the market start pushing up, higher lows and higher highs, higher lows and higher highs. And then we'd like to see it snap back in the direction of that current market bias with some momentum breaking below that previously closed lower high so that we can take that trade short in the direction of the market bias. Yesterday, we made that little push higher, but then the bottom fell out right on the open and we never had a chance to, come in. I always wait. I don't trade right on the open for any of these instruments simply because there's often some whip in that opening half hour, opening hour. I would choose to wait. Sometimes you miss things like this. Oftentimes it works in your favor not to try to take the first trade out of the gate. Yesterday, market just fell in the direction of that current market bias, went straight down, and had a pretty darn big short day yesterday. But today, new day, new plan. As far as how the market's going to act, we don't know. We'd like to see it push higher though. We'd like to see it push up, making higher lows and higher highs. And then if it breaks back down, we'll trade in the direction of that break, in the direction of the market trend, right? So that's what we're looking for. Over on crude, what's happening on crude? Well, we have a long bias on the 4 hour and we have a short bias here on the 30-minute. So for crude, we're not going to do anything because it's mixed up. This is a signal that train might be slowing down and maybe it's going to come to the station and stop and then reverse. We don't know. We're not going to try to guess. You know, it might just throw some fuel on the fire and blow right through the station and keep moving, you know, back up. But we don't know. This is one of those iffy things. Maybe there's stuff going on that's causing the train to kind of get mixed signals about what it needs to do. So we're not going to jump in front of the train. We're not going to try to guess what the train's going to do because that could get us hurt. We're going to wait until we figure out what that train's doing, and then we'll do something, right? So for crude, we're in a mixed bias. 4 hours long, 30 minutes short, we're not doing anything. Big X on crude. Over on gold, what's happening over here? Well, we've got a short bias. The 4 hour bias is short, the 30-minute bias is short. So on gold, we'll be looking for short trading opportunities. That will look like, same as the ES over here, that'll look like the market pushing higher. We want to see it making higher lows and higher highs, higher lows, higher highs, higher lows, higher highs. And then we'd like to see it break with some momentum back below that previously closed lower high. And that's where we would take our entry if that so occurs, right? So that's all we're looking for. So we've got short opportunities on gold, short opportunities on crude. I say opportunities. That's what we're looking. We're looking for short trading opportunities, but we need to see the market push higher first, and then snap back in that direction with some momentum, and then we'll be able to take our trade. If it doesn't happen, don't do anything. Patience. Patience is the hardest thing, at least for me, with trading. You know, when you don't have any signals, nothing's lining up for you. You know, using the indicator here, you're not getting the green triangles, the red triangles telling us, hey, watch this next bar, maybe there's some opportunity. And when you go multiple days in a row without taking any trades, you can get kind of antsy. At least I can get kind of antsy. And being patient is really, really, really hard. And that's where you've got to have that process. If you've got a process, something to stick to, it helps mitigate your internal desire to want to go take an action out of emotion, out of boredom, out of whatever it might be, fear of missing out, whatever, right? It takes away some of that emotion and allows you to act methodically. And that's what we need to do in order to be successful over that long term. So anyway, that's it for me. Looking for short opportunities on crude, on S&P and gold. We're not doing anything on crude. It's got a big X there. So we're going to wait and see if we get a push up, and then we're going to look to trade it short on, you know, as the market returns to that current market bias. If things started pushing up today and just kept pushing up, again, don't do anything. Wait for the market to figure out what it wants to do and then trade in that direction. All right. So that's it. Have a great one.